What's up, Bitcoin Live Wire community? Today we need to talk about where Bitcoin stands right now because the market is at a critical inflection point. Bitcoin is currently trading around $95,600. We're in extreme fear territory, with the fear and greed index sitting at just 10 out of 100. That's not fear, that's extreme panic. And yet, some of the smartest institutional players are still buying. Let me walk you through what's happening, the technical levels you need to watch, and most importantly, what you should be doing with your portfolio right now. First, let's talk about the elephant in the room. Strategy, formerly known as MicroStrategy, just made another Bitcoin purchase. Between November 3rd and November 9th, the company acquired 487 Bitcoin for approximately $49.9 million. That's an average price of $102,557 per Bitcoin. Now, here's what's interesting. This was their largest purchase in 6 weeks. While everyone else is panicking and selling, Saylor and Strategy are accumulating. The company now holds 641,692 Bitcoin. Think about that for a second. That's more than 3% of Bitcoin's entire 21 million supply, and their average cost basis? $74,079 per Bitcoin. This means Strategy is sitting on approximately $20 billion in unrealized profit, even with Bitcoin at current levels. They're not worried. They're buying more. But here's the reality. Strategy's stock has been hit hard, down over 40% from its recent highs. The stock is underperforming Bitcoin significantly, which tells us that the market is skeptical about their aggressive accumulation strategy. Short sellers like Jim Chanos have raised concerns about the premium the stock commands over its Bitcoin holdings. So, what does this tell us? It tells us there's a massive disconnect between institutional conviction and retail sentiment. While retail investors are panic selling, institutions like Strategy continue to accumulate. This is classic smart money behavior. Now, let's dive into the technical picture, because this is where things get really interesting. Bitcoin is currently holding above $95,000, but just barely. We tested as low as $94,491 on Friday, which was the lowest level since May 7th. That's a significant breakdown from the psychological $100,000 level we've been discussing for weeks. Here are the critical support levels you need to watch. First, support sits at $94,697. If we lose that, the next major support is at $93,824. And if that breaks, we're looking at the strongest support level at $92,824. These aren't just random numbers. These are levels where buyers have historically stepped in. They represent zones where demand has previously absorbed selling pressure. On the resistance side, Bitcoin needs to reclaim $96,571 to show any signs of strength. Above that, we're looking at $97,571, and then the big one, $98,445. The real battle, though, is getting back above 100,000. That level has now flipped from support to resistance, and it's going to take significant volume and buying pressure to reclaim it. From a moving average perspective, the picture is concerning. Bitcoin is trading below its 50-day moving average, which is currently sloping downward. This indicates short-term weakness. However, the 200-day moving average is still sloping upward, which suggests the long-term trend remains intact. The relative strength index is sitting at 32.57. This is technically neutral territory, but it's getting close to oversold conditions. We're not quite there yet, which means Bitcoin could still fall further before reaching extreme oversold levels that typically mark bottoms. Here's what's particularly bearish. We're potentially forming what's called a death cross. This happens when the short-term moving average crosses below the long-term moving average. Historically, when Bitcoin forms a death cross, it leads to extended downtrends, with average corrections of 21 to 34%. We're already down 24% from the peak, so we're right in that range. The volume profile is also telling. We're seeing elevated volume on down days, which confirms genuine selling pressure. This isn't just low volume drifting lower. This is active distribution. Now let's talk about what's driving this weakness, because understanding the why is just as important as knowing the what. First, Bitcoin ETF outflows have been brutal. We saw $870 million in outflows in a single day recently, the second highest daily outflow on record. November has seen over $600 million in net outflows, compared to $3.5 billion in inflows during October. That's a dramatic reversal in institutional sentiment. Second, long-term holders are taking profits. On-chain data shows they've sold 815,000 Bitcoin over the past month, the largest distribution since January 2024. When the smart money that bought early starts selling, it creates supply pressure that's hard to absorb. Third, there's a $5 billion Bitcoin and Ethereum options expiry happening. This concentration of risk around key strike levels at 100,000, 95,000, and 90,000 is creating volatility. As prices move toward these levels, hedging flows and forced position closures can accelerate moves in either direction. Fourth, the Federal Reserve situation is creating uncertainty. Markets are now pricing in only a 40% chance of a December rate cut. Without the prospect of easier monetary policy, risk assets like Bitcoin are struggling. Remember, Bitcoin tends to perform best when liquidity is plentiful and interest rates are falling. And fifth, there's been a liquidity drain from the recent government shutdown. The federal government ran fiscal surpluses during the shutdown, which removed liquidity from markets. Analyst Mel Madison noted, "We've had one of the driest periods for fiscal liquidity in months." However, and this is important, Madison also said the floodgates are about to open. As the government resumes spending and fiscal largesse returns, that could provide fuel for risk assets, including Bitcoin. The timing of this liquidity injection could be crucial for Bitcoin's next move. So what should investors do right now? This is the million-dollar question, and the answer depends on your time horizon and risk tolerance. For long-term investors, this could be a gift. If you believe in Bitcoin's value proposition as digital gold and a hedge against inflation, these pullbacks are opportunities to accumulate at better prices. Remember, Strategy is buying at $102,500. They're not selling, they're accumulating. The key is to dollar cost average. Don't try to catch the exact bottom. Nobody can consistently time the market perfectly. Instead, consider buying in tranches. Maybe you allocate 25% of what you want to invest now at $95,000. Then another 25% if we hit $93,000, and so on. The critical levels to watch for accumulation are $93,000 to $95,000 as an initial zone, then $90,000 to $92,000 as a deeper accumulation zone if we get that far. For traders, the strategy is different. Right now, the trend is your enemy. Fighting a downtrend is how traders get hurt. The smart play is to wait for confirmation of a reversal before taking long positions. What would confirmation look like? Bitcoin needs to reclaim and hold above $99,000. That would be the first signal that buyers are stepping back in. Even better would be a move back above 100,000 with strong volume. That would indicate the breakdown was a false move and buyers are back in control. Until we see that kind of strength, trading long is risky. The path of least resistance right now is still to the downside. For those who are already holding Bitcoin, this is where your conviction gets tested. If you bought Bitcoin as a long-term investment, nothing has fundamentally changed. The supply is still capped at 21 million. The halving earlier this year reduced new supply. Institutional adoption continues despite short-term outflows. And the narrative of Bitcoin as digital gold remains intact. But if you're over-leveraged or invested money you can't afford to lose, this volatility should be a wake-up call. Never invest more than you can afford to lose completely. Crypto markets are brutal, and they will test your emotional limits. One thing to absolutely avoid right now is panic selling at the bottom. The worst decision you can make is selling after a 24% drop when we might be near a local bottom. If you were comfortable holding at 120,000, you should be more comfortable at 95,000, not less. The data suggests we're getting close to oversold conditions. The fear and greed index at 10 is extreme panic. Historically, these extreme fear readings have marked excellent buying opportunities. Not immediately, but within weeks of reaching these levels. Here's my personal take. I think we're in the process of forming a bottom, but it might not happen immediately. We could see one more flush down to the 90 to 92,000 range to fully clear out weak hands and over-leveraged positions. That would represent healthy consolidation before the next leg up. The December 10th Federal Reserve meeting is going to be critical. If Powell signals any dovish shift or keeps the door open for future cuts, that could be the catalyst for reversal. If he remains hawkish and rules out a December cut, we could see more downside pressure. Watch the ETF flows closely. The day we start seeing consistent inflows again, that will be an early signal that institutional confidence is returning. Right now, institutions are on the sidelines. When they come back, and they will, Bitcoin will move fast. Also pay attention to what Strategy does. If they announce another large purchase, that's a vote of confidence from the largest corporate Bitcoin holder. Their actions matter because they signal to other institutions that this is still a buying opportunity. Remember, Bitcoin has been declared dead hundreds of times. Every bull market has scary corrections. The 2021 bull run had a 50% correction before Bitcoin went on to make new highs. This could be that type of correction, a healthy reset before the next leg up. The key is to not let short-term price action shake you out of a long-term winning position. If your thesis for owning Bitcoin was sound at 120,000, it's even more sound at 95,000. Stay disciplined. Have a plan. Know your risk tolerance, and don't make emotional decisions when markets are volatile. That's the update for today. Bitcoin is at 95,600, holding critical support but facing significant resistance. Strategy continues to accumulate while retail panics. The technical picture is bearish short-term, but the long-term trend remains intact. We'll be watching those key levels I mentioned, 93,800 on the downside and 99,000 on the upside. The next major move will likely be determined by the Fed meeting in December and whether institutional money returns. Hit that subscribe button and turn on notifications so you don't miss our next update. The market is moving fast, and you need to stay informed. I'll see you in the next video. Stay smart out there.